of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Today, I'd like to talk. I received an interesting email over the weekend, and I just want to address it here. A bit of a trader wisdom session, so we can clarify a little bit how we do make money trading, or where do we lose our money to. We'll do that near the end. For now, market sentiment is overall allocating to risk. Crude oil is still rising, trading at 72.55, up 46 cents or 0.64%, 65 basis points basically, followed by the Euro stocks. The pound is strong this morning, up 40 pips. And then we have the U.S. indices to follow. The bonds are down 14 ticks. The Bund is down 26 ticks, and the 10-year note's down 5.5 ticks. Clearly, allocations to risk. The S&P is trading right in the gap zone left behind from yesterday. Again, yesterday's gap zone stat held fast. And we're in there today, looking a little bit stronger this morning. As far as what we're expecting this morning in terms of interruptions to the auction process, we just got Case-Shiller and house price index. We're getting Richmond Fed at 10 Eastern and consumer confidence as well. These are lower tier figures. Consumer confidence, 132 expected, prior 133.4. Other than that, a bunch of ECB speakers. There's a parade of them today. Started at 9 a.m. UK time. And that's that. Let's take a look at what we expected yesterday versus what we actually got. Yesterday played squarely into scenario 2. The primary expectation is we were opening on the edge of the two-day range, right against the gap zone high, left behind on the 20th, and the expectation is that we are likely to drift lower into it, get an impulse, a responsive impulse higher, and push back into the prior range. Part of that is because the reason for our drop is, again, news, the tariff news. And so the expectation is at some point in the day, somebody's going to tell us something we want to hear. So that didn't play out. That didn't happen. It seemed like the market just started to drift down. And then so we tested up, and then we pushed through the gap zone, down into 29.1875, which was a scenario 2 play. Did not extend the range down much on scenario 2. I did expect it to go back up and at least touch the prior low at 32.50. Did not do that. Mainly, it dropped down into this range from last Wednesday and then came back up. That's what actually happened. So the scenario 2 is even debatable in that instance. Here's what actually happened. Just clean this up a little bit. This is what actually happened. We open, test up 2 ticks, drop immediately into the gap zone mid, and bounce back up. So here I'm thinking scenario 1 is the play. Pull back to mid, boom, trigger long, back up to the prior high, unable. We have a weak local top here, a double top, and then it starts to drift lower. So those of you who are convergent, I narrated this trade, and then it just failed through, and then we extended the range down. So we put in the initial balance and we extended the range down. We extended right into 29.1775, which is basically into last Wednesday. And so this is what we've got. We've got a profile that has a weakish high, weakish low, no real consensus, kind of an odd shaped profile really on decent volume, 956,000. So overall, a balanced day, an open auction in the morning that broke lower and came back into balance and just held out throughout the day. Coming into the overnight session, carrying that narrative into the overnight session, the Asian session didn't do much, and then the European session kicked in right here. You can see the volume always picks up a little bit when the Europeans kick on. And then from there, it's all buy, looking strong this morning. Not very strong, but strong. Has just pulled back, got done pulling back to the mid of the session and VWAP and above yesterday's high. So all of the mid VWAP and yesterday's high are in confluence here at 29.29 where we are currently. And the expectation is we're likely to poke through, consolidate, and continue higher. So we've rolled over, consolidated, pushed lower, consolidated overnight, pushed higher, and then likely to consolidate below for a base, and then likely to continue higher. What are we looking at for today? This morning, the expectation, as I just said, the expectation, open auction in the gap zone, drift down into this 2650 area, consolidate, impulse higher, close the gap back up to 3250, consolidate, and then come up and back into balance. Remember, we're dealing with this point of control, MC point of control from back here at 36.37, and that's where we're expected to hold today. I'm expecting it to, if it does get there, I expect this stock zone at 38.25 to cap it out. I'll look to sell. If I'm not long into it, I'll look to sell against that virgin test, big area there at 29.38. If it gets up there, that would be nice and sweet. Secondary scenario, we open and we have a quick drift up. We close the gap up into 32.50. We push down, consolidate, and then we drift up and finish the same. So the question is, between scenario 1 and 2, the question is what does it do at the very beginning? Which brings us to scenario 3. In this case, since these are so close together, scenario 3 is an open auction that attempts higher and then gets impulsive down, tangles with yesterday's point of control, and starts to drift through the range yesterday down into 29.20 to finish in range. Most likely, though, scenario 1 or 2 pushing higher into 36.38. That's what I'm expecting. Okay. One thing that I got a message yesterday that said where the trader was saying, you know, why is it that I'm doing these trader bites and all that stuff when actually I'm taking money? If I'm in fact making money, then I'm actually taking money out of these traders' pockets, people who are reaching out or looking to me for guidance on learning to trade. My background is prop trading. I ran a shop in the Board of Trade for some years and have put people through the process of experienced and inexperienced through the process of making the turn while funding them as a trader, just traditional prop as an employee, right? So this is the experience that I've been sharing publicly since 2008. and even before that privately. But the thing you must know is that just because I'm making money, it's not necessarily a zero or negative sum game, like many like to say. It is ultimately, but when I'm making money, for example, if I'm short the market, short say 29.29, and the market drops to 29.20, and I made 9 points per contract, I'm not actually taking that money out of another trader's pocket. What is happening here, what actually happens is I've sold some value and I've bought back lower value. And that value may mean nothing to the participants that lost that value, because their time frame is such that a 9-point drop is not even noticeable. It's not even talked about. A fund, for example. And you see this in stocks, right? In stocks, when you're shorting a stock, you're borrowing those shares from somebody who's long. And that somebody is generally not an individual. It is a large group of people. And you're borrowing that value, and then you're selling it at the market, and then you're buying it back and delivering it back at a lower value to that fund, to that stock fund, mutual fund, whatever it is. It's not like I'm going out to the individuals following me and pulling money out of their pocket when I make on a trade and I lose on a trade. It is a large pool, and we make and lose money as traders as a result of a change in value in the stock or in the commodity that we're trading. So a lot of people feel that you can't win at this because you're essentially pickpocketing other people. In fact, they question the ethics of trading. And I'm going to tell you that this is a narrow view, in my opinion, because you are simply taking advantage of a change in valuation, a change in value of that particular commodity. And it is a huge number of participants, and you're taking a small sliver of that change of value. And because the people trade at different time frames, invest at different time frames, nobody really cares. Okay, this is almost like saying, I should stay home because if I get on the bus and take a spot, then I'm stealing that spot from someone else. Well, there's another bus, and every person on there may have a different destination. You might leave when somebody else gets on. Things like that. You can't think in that way. And I believe in that if you don't get that straight, if you feel guilt about what you're doing as a trader, it makes it that much harder to make money. And so we are absolutely betting on a change in value of a particular commodity within our time frame. We trade within our time frame, okay? And then other people trade within their time frames. And so it's not like it's not like you go into a restaurant, you occupy a seat, and as long as you're there, the expectation is that seat will sit there and nobody else can occupy it. You might be there for a quick cup of coffee, 20 minutes, and somebody else may be there for a 3-hour meeting. And that seat's just, the seat is being traded again and again and again. New customers are coming in, picking that spot, paying and leaving. And this is the same process for us, or occupying space on a train or occupying a seat on an airplane. It's the same process. You're occupying that valuation or that slot for a short period of time. Okay, so don't feel guilty because you're clicking and making money while other people have to go and do manual labor or whatever. It's a problem that I've had with my traders, where they start to make money and then we run into this misunderstanding of how they're making money, because they believe that when they have a good day, they're happy about it, but there's a level of guilt. And I'm guessing that most people haven't felt this way about trading, maybe, but it comes into play once you make the turn and start making money. There's a level of guilt that starts to happen because you feel like you're just ripping somebody else off, taking someone else's money. I know this is kind of way out of left field as far as a topic, but it's important to understand that you're providing a service as a trader. You're providing liquidity. You're a part of the mechanism that prices value. That's what you're doing on a very short-term basis. You and thousands and hundreds of thousands of others, millions of others collectively are making the market. Just remember that. So you serve a function that the economy needs. Without us as traders and investors, the market would be a lot more volatile. And we can contribute to that volatility by, being part of the selling short frenzy or buying frenzy. Yes, we can be part of that, but traders mostly are a stabilizing force on the market. Okay. Good luck, everyone, and I'll catch you tomorrow morning. Take care.